The good news is that for the first time in 5 years, the European Central Bank have actually, in their wisdom, decided to cut interest rates. They've cut interest rates by 0.25%, and the borrowing rate within the European Union is at 4.25. It's come down from 4.5. What does that actually mean? Well, that's actually great news because, as I've mentioned before, it's the first time in 5 years that we've seen the ECB cut rates. And we've had a lot of clients talk to us and maybe been sitting on the fence a little bit, worrying about, and said to us that they will start looking again once interest rate pressures have eased off. Well, I'm pleased to say that that is now the case. So if you are worried about interest rates continuing to rise, well, it looks like that now is not the case. How low will they go? Well, that's a very good question. General consensus is that we may see another 2 interest rate cuts by the end of the year. My gut feeling is probably that might be a bit optimistic, but we should definitely see at least one more rate cut. In other news, we're waiting for the Federal Reserve to announce rates this week, and hopefully we'll see them cutting rates again. In the UK, obviously, we have a general election coming up, so it's unlikely that the UK will see any interest rates coming through. How's that affected Spanish mortgage rates? Well, it actually hasn't affected it that much. Euribor is still roughly at the same level as it was a couple of weeks ago, which is floating around the 3.65%. Markets had already included the rate cut. They were anticipating it. So it hasn't actually affected Spanish mortgage interest rates at the moment, but Spanish banks are extremely competitive at the moment. In fact, one of my colleagues, Stuart, recently last week obtained a 5-year fixed rate at 1.75%. So now's a good time to start looking at Spanish mortgage finance.